Hey, it's Michael Saul, also known as Tiny, with the market video for the week of July 7th, 2014. Hope everybody is going to have, or already had, depending on when you're watching this, a great Independence Day, nice 3-day weekend here to, I guess, I don't know, does it officially split up the summer? Not really, right? All right, there's still 2 months ahead of us here until the end of the summer. Anyway, let's take a look at what happened the past week. So the S&P 500 was in an ascending triangle or base here, and it broke out new highs as expected. Now we can look at hole number 200 as the next resistance. It's not really that far away. You could see here on on Thursday, right, the 3rd, not the 4th, because the 4th, the market is closed. You could see that we gained a point, and it was only up 0.5%. So I mean, it's not really that far to gain another 2 points here and get to the 200 level. This base is the SPY, of course. The Dow closed up nicely as well and finally broke out to a new high. It was taking its time, but there was nothing saying it wasn't going to get there. Mid caps had the high on Tuesday, and since then they've been consolidating. NASDAQ also with a really nice push up here. I want to take a closer look at the NASDAQ in a couple of seconds. And the Russell hit the all-time high on Tuesday, rejected it, and is now coiled up. We are overbought here on the short term across the board, which means we are susceptible to a potential pullback here, but nothing is telling us right now that the top is in or that we should be expecting a really sharp move down. Now back to the NASDAQ. Let's go to a monthly chart here, and we can see that the next level of resistance is 98.57. Okay, now a lot of people said when this happened, we will never see new NASDAQ highs in our lifetime. And even when the S&P 500 started to hit new highs and the Dow, people were saying NASDAQ, and myself included, I was saying NASDAQ has a long way to go, but if this 98.57 level gets taken out, well, all that changes. In my opinion, if that gets taken out, there is a very good chance that we see all-time highs on the NASDAQ. Now, is it going to happen this year? I mean, that would be a really big move from there. That would be another 20%. It's absolutely possible, okay? But I'm not saying that it has to happen this year, but if we get above 98.57 and hold there, I am going to be watching for the NASDAQ to hit all-time highs, at least, if not this year, at least over the next year or who knows, several years maybe. But yeah, it probably won't be that long for it to happen. Now, of course, if it doesn't get through this or it breaks it and it reverses, that's a different story. But right now, this is the target I am looking for. All right, so last week I was saying I believe that we were going higher until the Russell gets to a new all-time high. That happened, even though they didn't stick. Now my new thing is I think we're going to go higher until the NASDAQ hits 98.57. Okay, so the Russell hit its all-time high. That target's done. Now I think we're going to 98.57 on the NASDAQ before this upside is over. Doesn't mean we can't pull back before it gets there. Doesn't mean we can't pause. I think we are, like I said, really susceptible to a pullback here. But just shorting because, we've gone up enough, that's ridiculous. That's what the super gurus do. They sit there, let me give out my bear list, and then they don't talk about it when they get absolutely destroyed. Right? So don't fight the trend. I mean, it sounds simple, but so many people just get carried out of this business because it just can't go any higher. It just can't go any lower. Yes, it can. I mean, lower at least there's a limit. It can only go to 0, right? But higher, it can go a lot further than you are expecting it to. All right. Semiconductors also popped up to a new high. Good job by them. I mean, the banks are lagging, but I think they'll get to these March highs here. All right, you could see if you go to a bigger chart on the banks. Banks still have a way to go until they get their all-time highs, but I think they'll get to at least the March highs here. All right, let's look at some stocks real quick. Bank of America, it's been kind of sitting on its moving averages here, not doing much, and pushed up here. Overbought, so I would wait for a pullback here for buying opportunity. JP Morgan is consolidating. Citibank does not look good. It's just sloppy. I don't mean it looks weak. It just looks sloppy. All right, it's between its 50 and its 200-day moving average. And here's Bank of New York in a nice coil here. See what this does. State Street broke above its 200-day moving average, but it's sloppy overall. It's really got to get going here. I want to look at the Caterpillar. It's another one that's on my list. All right, nice push up higher here. You could see that a lot of people, they will say that a rising wedge is bearish. And right now we're at the top of that rising wedge. So are we going to break through this or are we going to roll over? I'll give you a little clue. A rising wedge is not bearish, okay? It is a consolidation pattern. We can go either way from here. Yes, it's extended, so I wouldn't be surprised if we maybe fill this in a little bit, but I'm not necessarily calling a reversal on Caterpillar here, okay? All it is a wind up here. It's a volatility contraction pattern, all right? Now back to some sectors real quick. Let's look at the broker-dealers. Looks like they're going to head to highs. Goldman looks like they want to head to their recent highs and maybe up to their March highs as well. Here's Morgan. Looks like they want to trade higher to the 2014 highs. Okay, let's look at some other stocks. Facebook continues to creep up. It looks like it's surfing on its 20 EMA. So, you know, this one still looks okay for higher prices. Google looks higher. It broke out here. We had pointed this out. It broke out of this nice pattern here. Looks like it's going to go higher. Looks like it wants to try these highs up here. Amazon still not acting great, but a lot better than it was back in May. See if it can get over its 200-day moving average. Apple looks like it wants to take out these highs. I still think Apple's going to go back to hold on one second. Let me show you. I think it's going to go back to 100 at a minimum. See, the all-time high is 100.72, $100.72. That is split adjusted, of course. Priceline. Yeah, looks like it wants to try to move higher as well. In a little pattern here. Netflix, very nice looking coil here. May need a couple more days to consolidate, but Netflix looks higher on the short term as well. Potash in a nice little pattern here. 20 EMA potential support. Maybe it wants to zigzag down, but Potash looks like it could be ready to try higher prices. Las Vegas Sands. Very, very sloppy. Remember, Las Vegas Sands and Wynn were leading for a while, and then they kind of, the market kind of caught up to them, and they went into laggard mode. But it looks like they may want to get off their butts here and try to trade a little bit higher. But just watch them. They're not the strongest out of the bunch. Here's bonds. All right, so bonds look good, broke out of the consolidation, but looks like it's a possible bull trap here. Want to pay attention to bonds here because if it loses this support and sticks, all right, could be headed back down for a quick trip down to that 200-day moving average. So pay attention here on bonds. Gold looked like it wanted to go higher, and then it got sloppy here. You could see on Thursday, a wide range candle. This probably needs a couple of days to digest here. Wheat, all right, tested the lows as expected out of the bear flag. Still looks lower, no signs of reversal yet. Soybeans, all right, we were watching this to test the 200-day moving average. Well, it didn't test it. It broke through it. It cratered through it. It's another little consolidation here. All right, and I'm still looking for lower prices on soybeans. Let's look at corn. Okay, corn went lower as well. We were looking for corn to go lower too. And they look like they want to go, it looks like it wants to go lower. Sorry, got to catch I'm getting ready for the big weekend. Apologies. Lean hogs is still choppy. Okay, and live cattle. All right, also just ripping it up here to the upside. Sugar, sloppy. Coffee, looks like it could get ready to test that 200-day if it breaks through this support here. And crude oil. Okay, crude oil, there is a seasonal tendency to top out into July 4th. That's where we are now. Looks like it may have already turned up here. We don't know yet. It could still turn from here or test the 50-day and turn. But be watchful here with crude oil because there could be some nice opportunities. Natural gas, yeah, just sloppy here. All right, so let's recap. Overbought, susceptible to a decline, but shorting is crazy here. Shorting just out of the blue is crazy here. If you have an intraday setup and you use a tight stop, well, then it's a different story, okay? But right now, doesn't make a lot of sense to just try to take stabs at the short side here, okay? But I still believe that if we do pull back or consolidate once again, that we will continue to go higher until the Qs trade up to this 98.57 at a minimum. Right? Doesn't mean we can't pull back before that. Doesn't mean that we can't take our time getting up there. But 98.57 now is my target that I'm using on the major indexes, and I'm picking it out here on the Nasdaq. Have a great 4th of July, Independence Day. Have a great 3-day weekend, and rest up, get ready. Could be an interesting rest of the summer here. I will talk to everybody in next week's video, or of course, if you join my email list, you'll get an update from me every market day. Have a great trading week coming up, and I will speak with you soon.